In today's video, I'm going to be revealing a super simple yet highly effective trading strategy that you can use in 2025 to finally become a profitable trader and get funded. The trading strategy that I'm going to teach you today only requires three things. The first thing is time-based liquidity, or TBL. So, if you do not know what time-based liquidity is, it is the previous week's high and low. So if you have a weekly candle, they have a high and you have a low, the previous week's high and the previous week's low will be time-based liquidity. Time-based liquidity is what CRT is based on. So, first thing is previous week's high and low, and then we have previous day's high and low. This plays a massive part in day trading. And then we obviously have previous sessions, high and low. Now the reason why I teach you time-based liquidity is because we are going to be using trading sessions or kill zones. The next concept we are going to be using today is fair value gaps. I am pretty sure you know what the fair value gap is, but if you do not, don't worry about it. A fair value gap is a 3-candle pattern where we have candle 1, we have candle 2, and we have candle 3. Now you can see the low of candle 3 does not touch the high of candle 1, leaving a gap in price. Here we have a bearish version where we have candle 1, candle 2, and candle 3. We see the low of candle 1 does not touch the high of candle 3, leaving a gap in price. This is also known as an imbalance. So, why is this important? Everything in the market is about fair value. Everything is about equilibriums and fair value. The market wants to offer both players, both buyers and sellers, fair chance. Now, if we have an imbalance in price action, that means that this middle candle, candle number 2, displaced quickly and didn't offer any sell side. So what the market is going to do is the market will more often than not trade back into this gap and then offer sell side before taking prices higher. In the same way, here we have a bearish fair value gap. Only sell side has been offered here, so the market will normally retrace to rebalance this bearish imbalance to offer bullish prices and then take the market down further. So we, as traders, we need to spot out fair value because we can anticipate when the market will offer fair value to traders before running the move higher. So we are going to be using fair value as a point of interest and wait for price action to hit that level. Now, for this particular strategy I'm teaching today, I want you to wait for a fair value gap to form in London kill zone. That is from 2 a.m. to 5 a.m. Eastern Standard Time, New York time. Now that we have our higher time frame fair value gap that formed within London kill zone, so how would that look like? Let's say, for example, this box is London kill zone, and we see price action trading down and then displacing higher. If we leave a fair value gap before the displacement, that is going to be this piece of price action. So we are going to wait for that fair value gap to form. Here I've marked that gap out, and now we just wait for price action to trade back into that gap. Now normally the higher time frame, it's up to you to decide, but for this strategy I prefer the 15-minute time frame as my higher time frame, and my lower time frame will be the 1-minute time frame. Just make sure that your time frame alignment is correct, and if it's correct, you can use any 2 time frames. Now, dropping to the lower time frame, that is what LTF stands for. We have a lower time frame change in the state of delivery. Now, what is a CISD? A CISD, or change in the state of delivery, is the formation of an order block. Now, we all know that order blocks are a single or consecutive down close candles that took out liquidity. As soon as price action closes above the opening price of these down close candles, that is your change in the state of delivery. In the same way, a bearish order block will be a up close candle or consecutive up close candles that took out liquidity. Here we have, let's say, 1, 2 up close candles took out liquidity. A bearish order block will be when we close below the opening price of these consecutive candles. Now, that is your change in the state of delivery. I want you to wait for a change in the state of delivery to happen as soon as we tap into that higher time frame fair value gap. So here we can see price action trades lower on the 1 minute. We sweep liquidity. We close above these consecutive down close candles. That is your confirmed CISD. Now, where do you take your actual entry? You can do it in two ways. You can take your entry on the close of the candle that closed above these down close candles, or you can take your entry on the retest of this order block. So your entry would have been here. We're going to place our stop loss below the swing low, and we are going to take a fixed to our target. So just to recap everything, here I have our entry checklist. This is everything we need in order to trade this strategy the way it's intended to trade it. So the first thing that we are going to wait for is we are going to wait for a fair value gap to form in London kill zone. Now, how does that look like? Again, here we have the market. Let's say we enter into London kill zone, which is going to be represented by this box. Price action trades into London kill zone, and we form a fair value gap. Now, rule number 1 has been met. Now we need to wait for price to trade into that fair value gap on the higher time frame. Here we can see price action goes up and trades into that fair value gap. Now we check this off. Now we need that lower time frame change in the state of delivery. So how does that look like? Here we're going to zoom in to the 1 minute time frame. We are going to wait for price action to take out liquidity and close below the consecutive up close candle or singular up close candles. That will be our lower time frame change in state of delivery confirmed. Now we can check off this box. Entry on the retest of order block. Remember, the single or consecutive up close candles will be our order block. So we take an entry on the retest before we take the trade lower. Now we can check off this box. We have a fixed to our target. We can check stop loss below the swing or above the swing. Now, below the swing for a buy, above the swing for a sell. In this case, we are selling, so our stop loss is going to go above this swing high. Stop loss there, we take a fixed to our target, and then we have this checked. If you have all 6 of these checked, you have a valid trade. If you want to make 2025 the year when you actually become a profitable trader, go ahead and check out the link in my description. It takes you to the mentorship program. Guys, this isn't just another course. This is a complete mentorship program where I walk with you every single step by step, and I show you exactly what you need to do in order to become a profitable, consistent trader. You're going to get access to the models that I used to get funded 400K. I've used the payouts from the prop firms to fund my personal account, and I no longer rely on prop firms. I'm a completely independent full-time trader. I have been trading for over a decade, and I know exactly what you need. I've been where you are. I've struggled the way you are struggling. So if you are struggling to get funded, you can join my live trading sessions where you can see exactly the trades that I take. And I do also have Q&A sessions with my live trading sessions. So I explain every single model in depth. If you need any help, I do have personalized one-on-one coaching. You can go ahead and read through everything that's included in the course. And if you don't want to take my word for it, just have a look at the testimonials from the people in the mentorship program. This is an absolute game changer program. So if you are ready to become our next success story, I do want to encourage you to check out the link in my description. So here we have our first example on Euro USD on the 15-minute time frame. Now, first of all, what do you see here? We start trending down lower, and by the way, this blue box is Asia kill zone. It is from 8 p.m. to midnight New York time. London session starts at 2 a.m. New York time. If you are looking for this indicator, it is called FXN Asian Session Range. Now, Moving on, let's wait for London to open. Here we have the very first candle of London open, and what do we have here? Here we have this fair value gap that has just formed in London kill zone. So either we trade into this gap or we trade higher and form another gap. Let's see which one happens. The very next candle expands and we start expanding away from this gap. So this can potentially be a breakaway gap. If you look to the left, here we have 1, 2, 3, 4, 5 consecutive bearish candles. What is that known as? Here we have a closure above those consecutive candles. So what do we have here? Here we have our change in the state of delivery on the 15-minute time frame. So this 15-minute chart just went from a bearish program up to a bullish program. So looking for buys will be higher probability, but we still need to tap into a fair value gap that forms in London kill zone. So let's see, do we have a new gap that formed? Yes, we do. We have it from this candle's high to this candle's low. Here we have our fair value gap. Now we wait for price action to trade into that gap. We can drop to the 1 minute time frame. Remember, from the 15 we go to the 1 minute. Here we have that breakaway gap. This line is that 15-minute change in the state of delivery. And now we are approaching this fair value gap. Let's see what price action does. We wait for price action to trade into this gap, and then we wait to see what happens. What happens here? Now, I've played this one candle too far, so let's see what happens. I'm using bar replay not to cherry pick, to show you exactly how to read price action. If you think I'm here cherry picking, go away and watch a different video. I'm here to educate you on price action. So, we tap into this fair value gap with how many bearish candles? That is very important. We have 1, 2 bearish candles, a bullish candle, and then 1 bearish candle. This bearish candle took out equal lows, so we did take out liquidity, and now we get closed above. We close above 1 bearish candle that took out liquidity, so this becomes my change in the state of delivery. That is my order block on the 1 minute time frame. So I take my entry on the retest of the order block. Remember, stop loss goes below the swing low. We can do it 1 pip, 4.5 pips, and target a fixed 2R for the trade. This will be our first trade. Let's see how this plays out. We tap into our 1 minute order block and price action immediately shoots higher and we are out of our trade. So we have 2R banked. Now you can decide, are you going to move your stop loss to break even, take a partial and leave a runner running for liquidity on the higher time frame? If I zoom out, we can see that we have a nice built up liquidity here above Asia high. So I can leave a small runner running until I hit that liquidity pool. Let's see how that plays out. We do take it out for a 2.6R on this trade. Here we have our next example. So on the 15-minute time frame, we can see Asia kill zone has printed. We have taken out Asia lows, which is just a very nice confirmation. So we have taken out Asia low. Now, what do we have here? We can see that we have a nice bullish candle after taking out this liquidity. We wait for London kill zone to print, and immediately what happens? This candle closes above a single bearish candle that took out liquidity. So this is known as our change in the state of delivery on the 15-minute time frame. Let's see if we get that 15-minute fair value gap. We do get that fair value gap. I'm going to measure out that gap. Here we have our fair value gap on the 15-minute time frame. Dropping to the 1 minute time frame, let's see if price action trades into our gap. I am just going to draw this in. Okay. Now let's wait for price action to trade into our 15-minute fair value gap. What happens here? Here we can see that we get a tap into this fair value gap with 1, 2, 3, 4 consecutive bearish candles. So as soon as we close above, that is our valid change in the state of delivery. Let's see what happens. Now what happens now? Price action has swept liquidity and made a new low. So our change in the state of delivery moves from this point down to this point, because here we have 3 consecutive bearish candles that took out liquidity. So this is our change in the state of delivery point. Do we get a close above? We do in fact get a closure above. Now we take an entry on the retest of these down close candles, because that is our order block. Stop loss goes 1 point below the low, and we target a fixed 2R. Let's see how this trade plays out. It takes a while, but eventually we do get there. Let's drop back to the 1 minute time frame so that you can see the price action. We do retest this order block. We go back down to fill in this little propulsion block, and then we start creating bullish structure with higher highs and higher lows. Here we have our final example on the 15-minute time frame. Now we can see again, Asia session has printed, Asia kill zone. Now let's dissect this piece of price action on the 15-minute time frame. First of all, what do we see? We have a sweep of this high, so we've taken out liquidity, and we have also completely filled in this fair value gap. Now, price action has traded lower to close below this up close candle to form our change in the state of delivery. We traded up to retest that order block, and we made relative equal highs. Here we have relative equal highs, and now we have traded back down to close through these 2 consecutive up close candles with a failure swing. So this is known as my propulsion block. I'm just going to make it an order block. Now we are waiting for London to open and form that fair value gap. Let's see what happens. So here we have that fair value gap that formed. Now let's drop to the 1 minute time frame to see if we get an entry. Here we are on the 1 minute time frame, so we are just waiting now for price to retest this fair value gap. Let's play price ahead to see what happens. Here we trade into that 15-minute fair value gap with 3 consecutive up close candles. So a closure below this opening price will be my valid change in the state of delivery. Now, we get that aggressive closure below, and we take our entry on the retest of that order block. Stop loss goes 1 point above the high, so that's 6.5, and we can target a 2R for this trade. Now the reason why I really like this trade is because you have 3 consecutive up close candles here. As an order block, price action taps into that order block. We have another liquidity sweep, and we have aggressive displacement forming fair value gaps. So we can see that everything can align in the market to take a very beautiful A+ setup. Let's see how this trade plays out. We do run lower, so if you decide to take break-evens, you would take a break-even at a 1-to-1. Let's see if we hit that. No, we don't, and we get stopped out. So I'm going to mark this trade with a red vertical line because we had a losing trade. And I put this example in to show you every single thing can align in the market for you to take a trade, and you can still lose that trade. That is why it's important to have a set list of rules that you wait for before taking a position. And if you lose the trade, pat yourself on the back because you followed your rules. You are better than 90% of the traders out there. There's no reason to jump strategies after getting a losing trade. Nothing in trading is 100%. A professional trader plays a statistic. If you have a 50% win rate with a 2-to-1 risk to reward to risk, you are a very, very profitable trader. The model I teach in my mentorship, my personal model, has got a 75% win rate with a minimum risk to reward of 2R. And so That is extremely profitable, but that means I still lose 25% of my trades. Here you can see my quick backtest I've done on this strategy, where we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, and we had 3 losses. So we had a 70% win rate with this trading strategy. Remember, we take a fixed 2R for this position. Now, what does that mean? How many R have we made? Now, we had plus 2, 4, 6, 8, 10, 12, 14 R gained. So we had a plus 14 R minus 1, 2, 3 losing trade. So minus 3 R. We have made 11 R. If you risked 1% in how many days is this? 19 days. So just under a month, you would have made 11% by risking 1%. You would have passed a funding challenge, the first phase of a funding challenge using this model, and it's a very simple model. And so that is why I say, don't get worried, don't get anxious with a losing trade. Trading is about playing statistics. If you have tested 100 trades and you know you are profitable after 100 trades, a losing trade shouldn't affect you. Guys, I hope you enjoyed today's video. I hope you found value. Leave a comment down below. Let me know what you want to see in the channel next. Let me know if you like the new videos, and I will see you guys in the next video.